This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Four horsemen of the fourth quarter. With the ugly third quarter almost done, there are four things investors need to watch that could make or break the year for stocks.
Up and away as home prices rise, developers are hoping big sales come in small packages.
Reinventing the Strip. What gaming industries are doing to lure millennials and turn around the rough year. All that and more tonight on Nightly Business Report for Tuesday, September 29th.
Good evening, everyone, and welcome. Just one day to go before the end of the month, and September sure hasn't been pretty for investors. All the major indexes, equities that is, on track for declines. And once the book closes on September, it also closes on the third quarter, which could be the worst quarter for stocks in years. But now attention turns to the fourth, when football games and investment years are won or lost. And this year's fourth quarter has at least four challenges that will determine whether 2015 turns out to be a winner for investors like you or a loser. Challenge number one, China and the global economy. The world, as Thomas Friedman wrote, is flat, interconnected. That's one of the key lessons of 2015. When China sneezes, the world catches a cold. And China's slowing economy, no one knows by exactly how much, has spelled trouble for commodities, oil and the metals most notably. But it's also meant harder times for companies that export into the world's second largest economy. Companies like Caterpillar and the automakers, including the besieged Volkswagen. China's stock market nosedived, albeit after steep run-ups. Billions in wealth evaporated. So what's next for China, and what will it mean for investors the world over? Challenge number two, U.S. corporate profits. How will they stack up for the third quarter when companies start reporting about 10 days from now? FactSet predicts S&P 500 profits could decline 4% or more. The bright sectors, like consumer discretionary and financials, will be more than offset by declines in energy, where profits could fall by 2/3 from just a year ago. It's tough for stocks to make headway when corporate profits stall.
The big picture is that we are in an earnings recession, and I think it's these continual hits, downgrade in earnings that is really just weighing on this market.
Challenge number three, Congress and the White House. Speaker Boehner's resignation may make a government shutdown less likely this week.
I spend every day trying to do the right things for the right reasons, and I'm not going to be any different tomorrow than I am today. I'm not worried at all.
But Boehner will be gone come November. What then? What happens in December when the government's borrowing ability dries up unless the debt ceiling is raised? Americans seem to like divided government. Dysfunctional government? Not so much. Finally, challenge number four, the central banks. Will easier money from the central bankers in Europe, Japan, and China help those economies stabilize or even expand? And when will the Fed move? Janet Yellen and others say a rate hike will probably come this year. But if a rate hike finally does come, how will the markets react? Four big unknowns, four big challenges as the fourth quarter kicks off.
And Brian Jacobson joins us now to talk more about what lies ahead for the markets next quarter. He's portfolio strategist at Wells Fargo Funds. Nice to see you again. Welcome back, Brian. So look into the
Thanks for having me.
Look into the fourth quarter. Is it going to be better? Let's start out with a blanket kind of statement here. Is it going to be better than the quarter we're just ending?
Well, I really don't see how it could be much worse than the quarter that we're ending. As you pointed out, there were a lot of things that were sort of weighing on the markets. Concerns about China, concerns about corporate profits, concerns about commodity prices. But the fourth quarter I actually do think is going to be better, not just because it can't get much worse, but also because the third quarter, the fundamentals weren't really all that bad. There are a lot of concerns about the outlook for growth, especially coming from China. However, I believe a lot of those concerns are somewhat overblown. Their manufacturing sector has been slowing, but what isn't often talked about is how their service sector, which is a much bigger part of their economy, is actually growing fairly decently. So I think that actually the concerns about China, as those concerns maybe abate a little bit, we could have this headwind get a little gentler for us going forward.
We identified four challenges: China, corporate profits, Congress, and the central banks. Of those four, which is the one that you will be watching most closely in the fourth quarter?
Most immediately, I'm going to be looking at the data coming out of China, mainly because I think a lot of investors are really fixated on what's going to happen there. Are they going to be able to navigate the slowdown in their growth rate, going from 10% a few years ago to 7%, maybe 6% going forward? Also, in October, we're going to be seeing the results of the fifth plenum of China. The Communist Party is going to be having the fifth plenum, where hopefully they will lay out a bit of a roadmap about what sort of further market reforms they will be implementing. So I think it's actually going to be a very pivotal month, and a lot of it will be focused on China. But we also have corporate profits, as you point out. That's coming up here soon, and right now expectations are very low for those corporate profit growths, and I think low expectations are actually good in terms of being able to beat those.
Central banks, the U.S. Fed, we hear from several members of the Fed at different times saying that they are on track to raise rates sometime this year, but that would put them at odds with the majority of central banks across the world. Do you think that they will raise rates before the end of the year, and what kind of a headwind might that be in the fourth quarter?
I do think that the Fed will raise rates at some point this year. I actually think that maybe the October meeting, October 27th and October 28th, is on the table for a rate hike. It all depends upon the economic and financial conditions going into that meeting. So if we see some better data coming out of China, if the corporate profits, maybe earnings didn't decline by 4%, maybe if it was closer to 1% or flat, which is what I'm expecting, I think that the Fed could have a good footing for actually hiking rates. The key isn't necessarily whether or not the Fed hikes, it's why do they hike. If it's hiking because they think that the economy can handle it and inflation is turning up, the markets could actually take that as a very positive signal.
All right, Brian, we'll leave it there. Thank you so much. Brian Jacobson with Wells Fargo Funds.
And on Wall Street today, stocks meandered between gains and losses as investors looked ahead to Friday's employment report following yesterday's steep declines. The Dow Jones Industrials, they rose 47 points to 16,049. NASDAQ dropped 26, weighed down by a decline in Apple. And the S&P 500 gained 2 points.
Consumers remain confident in September despite all the volatility. The Conference Board said its index of consumer attitudes rose to the highest level since January. Lower gasoline prices were part of the reason for the rise in optimism.
Fiat Chrysler underreported roadway deaths. This, according to the National Highway Traffic Safety Administration, which said the automaker failed to report some fatalities and injuries required by law. Fiat Chrysler says it is cooperating with regulators.
The Senate is expected to vote at some point tonight on a bill that would keep the government funded, at least temporarily. And while it's expected to pass, the deadline to get it all done is tomorrow at midnight. Eamon Javers is in Washington for us tonight. And Eamon, the temporary spending bill would keep the government open until December 11th. But then what happens?
Well, it's anybody's guess, Sue. I mean, we've got a really weird situation in the House of Representatives where there's a total leadership vacuum after Speaker of the House John Boehner said he's resigning from that position. So they'll kick the can down the road here until December 11th. We expect that will pass tomorrow. So you'll look at a government shutdown potentially then, and there'll be a new leader in the House of Representatives and a very fractious Republican conference that's looking to pick some fights and not really looking to cut some deals with the Obama administration.
It's not merely the government shutdown that is hanging over the ledge here as Speaker Boehner wraps up his tenure. What else might he get done? There's the Ex-Im Bank, there's a highway bill, there's a lot of stuff out there.
Yeah, and then there's also the debt ceiling. Don't forget about that one. So important for financial markets as we go through the fall. That's going to expire sometime in November, according to the Treasury. So we'll have to watch and see what Speaker Boehner wants to do here. There is a school of thought that Boehner might want to clean the barn, as he's put it, and get a lot of these things done before he leaves as Speaker at the end of October. The question, though, is, does he even have the votes to do that? Could he pull that off? He's been playing it very close to the vest. He simply says he won't do anything differently than he would have done it otherwise now that he's announced his resignation.
All right, Eamon. Thank you. Eamon Javers in Washington.
Still ahead, why developers are thinking small to get the renter nation generation back into buying.
Home prices continue to rise. The latest report from S&P Case-Shiller reported a nearly 5% increase nationally in July from a year ago. The index has risen at a 4% or higher annual rate since September of 2012, and that's a rate of growth that's much higher than inflation.
And it is those rising prices that are keeping many millennials from buying a home, especially in urban areas where they want to live. But now that millennials are aging out of college and into marriage and parenthood, developers are coming up with new ways to get them back into buying. Very small ways. Diana Olick reports.
This really simple. Just pull this bedding
and the whole bed comes down.
Yes.
All right.
This is a picture frame that converts into a dining table.
Welcome home to your 372 square foot home, that is.
These are on magnets.
The eating space is small, but the whole idea is that the condo doesn't eat up your home buying budget. This unit sells for $275,000, about half the neighborhood's median price. That is how developers are targeting millennials, who until now have been the renter nation generation.
Definitely first-time home buyers. So about 80% of all of our buyers, actually for us, including our studios and our one-bedrooms, have all been first-time home buyers.
The studios may be small, but they are in the heart of a trendy, pricey D.C. neighborhood where most young people can only afford to rent.
We're definitely getting a consumer that's priced out of the market. You know, they look at older resales, and now they get to come and look at something that's brand new. And so that's a great difference when you're comparing a 1970s build, two-pipe, older condominium with something that's brand new with all the fit and finish.
The building does have this communal rooftop deck with spectacular downtown views. It does not, however, have some of the fancier amenities. No pool, no fitness center, but no sky-high condo fees either. Everything here is smaller.
We're certainly seeing the average unit size over the last 5 years has fallen from a plan standpoint by about 13%. And so you're seeing a drive toward more efficient units, smaller units, less hallways, less wasted space. Spend a lot of time in the design process on efficiency.
The building is about 70% sold, even before the grand opening. A big sign that a big cohort is willing to come back to buying, just not in a big way. For Nightly Business Report, I'm Diana Olick in Washington.
And to learn more about what developers are doing to get millennials back into home buying, read Diana's story on our website, nbr.com.
Las Vegas is also trying to lure millennials who don't play traditional games like slots. So executives are reinventing the Strip in an effort to turn around what has been a rough year for the gaming industry. Jane Wells reports tonight from Sin City.
It's not your pre-recession Las Vegas anymore. Sin City these days is about making slot machines more like video games. It's about things that have nothing to do with gambling, like building a massive outdoor arena. It's more about the rooms than the casinos, all part of sharper, smarter management as Las Vegas got back up from the recession's knockout punch.
We're doing better, thank God.
Still, it's not quite the glory days. Gaming revenues overall on the Strip are down 2% this year. There are fewer high rollers from Asia as a corruption crackdown in China is felt from here to Macau.
Really struggling in Macau. Our revenues are down 30-40%. The whole market has been under a lot of duress.
MGM Resort CEO Jim Murren thinks Macau will bottom by the end of this year and start turning around in 2016 as new properties open. In Las Vegas, the company is busy building a $400 million, 20,000-seat stadium with AEG as it continues looking for revenue outside of gaming. As for gambling, gaming equipment makers admit they're struggling to attract millennials to play slot machines. So Nevada has approved new machines which mix chance with skill, like video games. And casinos want a piece of daily fantasy sports leagues currently not regulated like gambling.
The concern we have right now is many regulators, many policymakers are saying that this is a gray area. Well, it's time to make it black or white. Casinos can either get involved in this or they can't.
Meantime, investment in casinos has taken a pause. Planned developments have really slowed down their rollout. Some buildings are still vacant, but not everywhere. The Tropicana was just bought out of bankruptcy by one of the few gaming companies whose shares are up this year, Penn National Gaming.
We only paid $360 million for it, which we And we love the location.
CEO Tim Wilmot says Penn plans to spend a couple $100 million to improve the Tropicana and provide a strip destination for its loyalty members across the country. And in another fire sale, the Blackstone Group bought the Cosmopolitan from Deutsche Bank for half off.
We posted our first net income ever in the history of the operation in the second quarter. So yeah, I mean, that's the goal, is to make money.
And if management is smart, the house always wins, eventually. For Nightly Business Report, Jane Wells, Las Vegas.
More layoffs in the oil patch, and that's where we begin tonight's market focus. Chesapeake Energy will cut about 15% of its workforce, which it's blaming on slumping oil and gas prices. The company will take a one-time charge of more than $50 million. Shares were down in initial after-hours trading on this news. During the regular session, the stock was up 1% to $6.79. Ralph Lauren is stepping down from his post as CEO. A former president at Old Navy, go figure, will be taking his place. Lauren has been the CEO and lead designer since he founded the firm nearly 50 years ago. Shares popped in initial after-hours trading. At the close, this stock was off slightly at $104.05. And AT&T may take a $1 billion charge, according to a regulatory filing. A change in exchange rates could wipe more than $1 billion off the value of the company's newly acquired DirecTV assets in Venezuela. Shares rose slightly today to $32.07.
Japan Tobacco is going to pay $5 billion to acquire the rights to Reynolds American's Natural American Spirits brand outside the U.S. Reynolds brands include Camel and Newport. It will also still have the rights to Natural American Spirit here in the U.S. Shares were up slightly to $43.47. Positive late-stage drug study results lifted shares of Eli Lilly. That company's treatment that it's developing with a firm called Insight for rheumatoid arthritis was more effective than a commonly prescribed medication. Shares rose slightly to $80.28. And Bank of America is expected to announce layoffs, according to the Wall Street Journal. A couple hundred of people in an effort to cut costs. Shares were off a fraction to $15.35.
Well, Sue, the big business of sleep may get even bigger. A new study shows that getting a solid night's rest can not only help your memory, but can also boost your immune system, keeping you healthy. Meg Terrell takes a look at the value of getting some extra Z's.
Scientists have known for a century that sleep facilitates our memories. Research published today suggests it similarly helps our immune systems remember as well. Researchers in Germany and the Netherlands compared the way our brains are understood to store memories with the way our immune system recognizes invaders. It all comes down to slow-wave sleep, they say, that time in our non-REM cycles that's the deepest slumber. It's during that time that an important transfer occurs of our memories, from initial to long-term storage. Similarly, they say, it's then that our immune systems retain information necessary to recognize invaders when they return, through increases in what are known as persisting T cells. The work adds to a growing body signifying how crucial sleep is to our health and happiness. But the Centers for Disease Control and Prevention says that so many people get insufficient sleep, it's a public health problem.
A very large percent of society either doesn't get the 8 hours or the 7 hours that they need, or they are unhappy with the amount of sleep they're getting. And even more importantly, the quality of the sleep is not that great.
An estimated 50 to 70 million American adults have a sleep or wakefulness disorder, and almost a third report sleeping less than 6 hours a night, according to the CDC.
If you get 2 or 3 hours of very high quality sleep, that can then offset the fact that you may not have gotten your full 8 hours.
More than 55 million prescriptions were written for sleep drugs last year, according to industry researcher IMS Health, including for medicines Lunesta and Ambien. The total market topped $1 billion in revenue. As we enter cold season, today's research appears to fortify that there's nothing better than a good night's sleep. For Nightly Business Report, I'm Meg Terrell.
Coming up, why entrepreneurs are flocking to a city far from Silicon Valley.
And here's what to watch tomorrow. We'll get a read on the labor market ahead of Friday's big employment report. ADP's employment is out on Wednesday. Fed Chair Janet Yellen speaks tomorrow afternoon, and a report on weekly mortgage applications, and that is what to watch Wednesday.
When you think of Nashville, you probably think of country music and really good barbecue. But soon you might think of startups and entrepreneurs. Kate Rogers reports from this southern city in Tennessee.
Nashville is known for its thriving music scene, which contributes some $10 billion to the region each year. But a different industry quadruples that stat. Healthcare, contributing $39 billion to the regional economy in 2014, according to the Nashville Healthcare Council. Programs like the Jumpstart Foundry are helping Nashville's healthcare startups take their ideas to the next level. They've graduated 48 companies in the past 6 years, raising a total of $31 million.
The great thing about the healthcare industry is they're going through pretty dramatic change, where there's new ways to reimburse, new ways to pay doctors, new ways to manage populations, new partnerships that are being formed. And that's all very scary and lots of change going on in the industry. Huge businesses are having to rethink the way they run their business. But that's exciting for the entrepreneur, exciting for the innovators.
And graduates like Envision Heart, which created an ECG machine that fits in the palm of your hand, are trying to disrupt the healthcare industry in a time of major change.
Nashville's a great city for launching a healthcare company. You know, we're at the crossroads of where there's innovation and healthcare services. And by being in this place, we can take our technology and test the waters.
But healthcare is just one piece of a thriving startup scene in Nashville, which is also home to the Nashville Entrepreneur Center, where we are right now. Now, this is one of 9 regional hubs across the state of Tennessee dedicated to giving would-be startups and entrepreneurs access to resources, including capital and mentorship opportunities.
The only way to really attract good ideas and entrepreneurs was to have really good mentors, people that had been in their shoes before, that have started businesses. They understood how difficult it really was to, or is, to start a business, and really walk with those entrepreneurs along the way.
But Nashville wouldn't be complete without its own music startup success story. Artifon created a product called the Instrument One that turns basic musical gestures into any sound, including a guitar or drum the user wants to create when hooked up to an iPhone, iPad, or computer. They're in the top 100 most funded projects on Kickstarter, raising over $1 million.
Nashville's become a bit of a perfect storm. There's the interest in startup culture and tech-based innovation is unprecedented. The tools that are available to people mean that they can start companies in a lot more different places and environments than they otherwise could. You don't no longer need to be in Silicon Valley.
And that setting is music to these entrepreneurs' ears. For Nightly Business Report in Nashville, Tennessee, I'm Kate Rogers.
Very cool.
That is a cool device.
It really is. To learn more about why entrepreneurs are flocking to Nashville, head to our website, nbr.com.
Well, the calendar may say September for another day, but some of the nation's biggest retailers are acting like it's December. From Walmart to Toys R Us, national stores are already rolling out some holiday offers, and as Courtney Reagan reports, they're going all out to make sure they get a piece of your Christmas cash.
It's less than 3 months until Christmas. To some, that may sound like an eternity, but for others, shopping time is already running short. Every year, the competition gets hotter and hotter, and this year is no exception, as retailers race to put out holiday programs earlier and earlier in hopes of grabbing shoppers' dollars before rivals.
It's always a tough competitive environment. But I think another interesting point is because retailers got so promotional in Black Friday in the last 4 or 5 years, it's actually diminished the importance of the holidays. So they've extended their promotions throughout the whole holiday season, and they've put them all online. So now consumers don't feel the pressure to be in the store 6 a.m. Friday, Black Friday morning.
Walmart has already been running its layaway program for a month and has released its Hot Toys as chosen by kids list, with many Star Wars toys topping the list. Kmart has already put out its now yearly tongue-in-cheek layaway commercial.
Ridiculous to take your gifts home today,
avoiding the holiday rush with no money down leasing.
And Toys R Us has lowered its free shipping threshold to $19, citing the upcoming holiday season as a reason for the move. Despite the ever earlier holiday program releases, the first forecasts for holiday sales are among the weakest in years. Retail consultancy Alex Partners forecasts holiday sales to increase, but at a level below the 5-year average, and a level that could fall below the lowest growth rate since the Great Recession. While there are a lot of positive factors influencing consumers currently, there are also many negatives. The job market is steadier, but wage growth is stagnant. Home values are rebounding, but expenses like healthcare and education are rising too. Gas prices are low, but depressed oil prices are partly a result of slowing global growth. Deloitte's retail practice leader, Rod Sides, says the balance ultimately tips with how the combination makes consumers feel when they look at their personal economic and financial portfolio. Sides says Deloitte's weak forecast is causing his clients, retailers, to take down their expectations as well. Few are predicting a terrible Christmas for retail, but it could be more ho-ho-hum. For Nightly Business Report, I'm Courtney Reagan.
I'm not ready.
I'm not ready. Not ready for Christmas or winter.
Or winter, exactly. That'll do it for us for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Mathisen. Thanks from me as well, and have a great evening, everybody. We'll hope to see you right back here tomorrow night.